I want to show you something first. The T-bill rate. Once upon a time, it was 4.4%, correct? So gone are those days where back then everybody cared so much about T-bills. Nowadays, nobody really tracks it. No one on YouTube really talks about it anymore. That's because T-bill rates have fallen all the way back down, past 3%, past 2%, and right now just at 1.38% in September. That seemed like the bottom, correct? But actually not, because in November, it became 1.37% only. But then something quietly happened. It started to inch up. I don't know if you know about it. It inched up to 1.39%, then 1.41%, which is the latest. This T-bill rate again is the 6-month one, the 6-month borrowing cost. So now let's look in terms of Singapore's longer period 2-year borrowing rates. Same thing, rates have also inched up quietly, in November in particular. In fact, for the 2-year rate, it's not even a small jump. It's from 1.19% to 1.41%. Well, so why should you care, correct? There are a few parts. The first is that if you're looking at fixed deposits, 6-month rate 1.41, 2-year rate 1.41 also, maybe don't even look at the 2-year rate really, or buy endowment plans at 2 years paying 1.4+%. No need, because it looks very much like rates might be trending up a little. If I were a saver, I might lean towards the 6 months T-bill again and see how it goes. The second, which may impact more of us, is especially if you have mortgage right now on your home or on your investment property. And today's discussion is going to save you big money. So if it interests you, continue watching. Hi guys, welcome back. Just now, I explained the possibility of interest rates inching upwards, correct? And disclaimer again, this is my own assessment of the market sentiment right now. And even if I'm correct, I have no idea how much it will inch up. I've also no idea if 2 years later rates come back down again. When you're watching, things might have changed. But as of right now, I did this research for myself because my own refinancing is coming up next year. And I'm curious to find out what I can do better because my current fixed rate is actually quite high relatively. This is if I can tack on to the current best rates of 1.55%. If I can get it down there, you'll see that from 2.4 plus thousand to 1.9 plus thousand, that's a difference of $450 per month. Hopefully, I can still secure it. If you are free to refinance right now, I do have solutions, and that's exactly why we need to discuss. Or also, if you're buying a new house, just nice, today I'm going to show you how to find the best rates for yourself. The second part of the video, I'll also be sharing with you why exactly it's a no-brainer to move away from HDB loans to the best bank rates that are on the market. Just in case again you bought a HDB flat or you've just collected keys for your BTO. Now let's start the first part, knowing how to find the best rates for yourself. This is a quick snapshot of all the best rates at different sizes. What we can learn, a few things. The first is that the bigger the size of loan, the cheaper it gets, correct? Now, firstly, I'm not advocating that you take a big loan and stretch yourself. In fact, usually I dissuade against. I'm just stating one puzzle of why the rich get richer. Because the bigger the loan size, the better the rates banks are willing to give. The second we can realize from this table is that the floating rate is now back to being cheaper than the fixed rate already. I didn't quite think through this previously, where actually the floating was still even more expensive than the fixed rate. The cheapest rate for those above 2 million of loan is at 1.3% floating. By fixing it, you're actually paying more simply because you are guaranteeing yourself that if interest rates spike, you are safe. It's a bit like insurance, you're paying that bit of premium for certainty. Do note again, this is as of 3rd of December. By the time you are viewing this, packages may have improved or changed. And that's why today I'm going to show you how to find out for yourself, at your situation, at your loan size, what is the best offer. So head over here to Cashew's portal. You can easily find comparisons and get AI assistance just on your phone. Simply go to cashew.sg. You can see straight away some of the best offers, key advantages of Cashew, and how to reach them. But wait, we're going to scroll down further and get to this part, which is the AI WhatsApp chat. Click on here and you'll get linked up to this chat over here. I've typed out best refinancing package for condo $1 million. Fixed package only. Then wait a moment, you see exactly what you need. Answers, correct? HSBC 1.43%, CIMB Bank of China. And it even generates for you a clear look. Impressive, correct? No beating around the bush, just clear answers. This will save you a lot of time. And you can even refine it. Let me show you how. We can even ask if there's any fixed package for 5 years. We can even ask if there's fixed package for 3 years. And now you'll see UOB, you'll see DBS, and everything now in a clear look again. If you want to remember what's available in the market right now, you can take a screenshot of this. Or if you want even more accurate for your situation, look for my partnership links below with Cashew to get started today. It's absolutely free. Cashew earns from referring mortgages to banks, and what we are running together is a special campaign especially for you and help you save big amounts of mortgage cost. You'll be getting from us $20 of cash vouchers for minimum loan size of $200,000. And if your loan size is $500,000 and above, you get $50 of cash vouchers. So take note of this promotion. Thank you for your support, and let's get back. Now let's pivot to a second situation. What if you're on a HDB loan? 6 months ago, I actually told a private client before, 2.5, 2.4%, not much difference between bank loan and HDB loan. Because if you change over, you cannot change back to HDB loan in the future if you want. That's why that small savings, no point for that. But today, the situation has changed. It's kind of a no-brainer already, in my opinion at least, to change from HDB loan to bank loan because you save more than 1%. And let me show you why. Let's key best refinancing package for 300,000 HDB loan. Do know again, for 200,000 and less, banks may not offer already. And we can even input, I only want to see fixed packages, and yes, I'm a completed project. Give it a moment and you would see this. DBS 1.55% for fixed 3 years. UOB also. So the difference is 1% of mortgage cost, correct? In fact, 1.05% mortgage cost savings per year. Hopefully you like this. And to get even more answers, you can even ask Cashew's AI, how much do I save per month versus staying on my HDB loan? See this? Clear answers. About $184 per month because your mortgage rate will drop that much. And in 3 years, that's 6,000 plus of guaranteed savings. Guaranteed. If you're moving from HDB loan to bank loan, I've actually built up this table specially for you, comparing between the two of them. HDB loan, interest rate is 2.6% for the entire period. Bank loan right now the best, 1.5% for 3 years, and then it floats after that. Next part, repayment amounts. HDB is flexible. You can pay it off anytime, short-term loan, partial repayments anytime, no problem. For bank loans, do note if you're on fixed, you cannot make changes. And any early repayment depends on mortgage terms and conditions. How long a period you can loan? HDB is 25 years or up to the age of 65. For bank loan, you can even stretch up to 30 years possibly. So if you're age of 35 and below, I would suggest at 1.55%, go ahead and stretch that bank loan. You'll save your CPF OA and you can actually keep and earn that arbitrage interest. Not sure? Leave in the comment sections, I'll try to elaborate further for you. Last but not least, common myth. For bank loans, can you use CPF to pay off mortgage? Yes, you can. So if you're keen to start, again look for my links below to use Cashew's portal, and hopefully you learn something that can benefit you in your financial journey. I've also this previous video I'd like to share with you. This is on property and this is on saving money. If you like either of these topics, see you there, and I'll sign off from here. Take care as always. Goodbye.